environment where so many people are talking about optionality and how well India is done. And when I put down that we've done it great, I always remember where we started. If a live audience had asked that if you go back in India's history, at our peak, what percentage of world economic output we were? And most people get surprised when I say that in the 1600s, before the British came to India, we were actually 40% of world economic output. And that's what you see here. India's in yellow, China's in red, bunch of other countries are there. Um, and then, of course, you saw the demise. You saw the East India Company being established. You saw Nadir Shah coming from Iran to India. You saw the British rule where this yellow bar shrunk, and you saw an India at independence that was very poor, full of people with no food production and low levels of literacy. And I think Green Revolution started the it continued with reforms, and of course you see a very different country today. But as we look towards the present and future, it's always important to remember that we have a lot to compensate for the past. So I always start with that. Now, let's move a little to the present and then we'll talk about the future. Some people know that India got its first Apple store a few years ago in BKC. But not many people know that the same Apple that opened a store in India in 2023 actually opened a store in China all the way back in 2008. And it's curious why a company like Apple, which opened a store in India in an equally populous country, took 15 years after it opened a store in China to open one in India. Since some of you are residents of Mumbai, you would know that the first Apple store opened in BKC. A second one is opening, and I always ask people, where do you expect it to open? And most people will tell me South Mumbai. If you don't know this, the second one is actually opening in Borivali in Mumbai, which tells you something about how even in the city of Mumbai, consumption is in places that we don't expect. But back to India and China. Uh, how do you resolve the conundrum of 2008 and 2023? The answer is here. India today has a per capita GDP of $2,700. China had exactly that when this Apple store opened. And there are many commonalities of China 15 years ago and India today. Uh, one is, of course, the size of our young population. One is the labor cost that was very low in China and led to a manufacturing boom, low in India today, and many others. But this is the first part of this 10 nuggets of two stories, two countries 10 years apart. The second is that, for a long time, if you look at the Indian economy, people have thought of India as a either poor country or as a country where there are either extremely rich people or extremely poor people. And this statement is always here. 1% of the households were what you would classify globally as high income, and 70% of the households were what you would globally call low income. It's certainly less true today, where you have 56% of India that is lower and middle income, which is actually the belly of India is expanded. And by the end of this decade, 80% of India will be low and upper middle income. In fact, more than half the country will be high and upper middle income. So, what really works for the country and for consumption is that you've got a meaningful middle class. I also asked this question that if you look at millionaires, dollar millionaires, how many does India have? And I use this word, which is the title of my upcoming book also, mango millionaires, Indian millionaires. India actually today has 8 lakh dollar millionaires, people who have more than 8 crores of assets. And if you look at this chart, at the turn of this millennium, that number was not even 20, 30,000. So we are producing more and more rich people, and the characteristics of these rich are also changing. And some of it is, by the way, reflected in the fact that today personal income tax is more than corporate tax. So individuals are getting richer. What you have in all of these two charts is now a very big consumer base. But the exciting opportunity, I think, is that in any industry, penetration is still so low. So, if I were to ask you, the US has about 300 million people. For those 300 million people, they have 9 million hotel rooms, about 900 million people at airports, 13, 14 million people, uh, 13, 14 million cars on the road. China, which is about 4 times the size, still has some way to go in terms of penetration. India is the same size as China, but compare the number of hotel rooms in India to those in China, compare the air passenger traffic, compare the durables penetration, compare the cars. So there's a long way to go. Some of you are probably complaining, saying, dude, it's already, this is why it's hard to get a hotel room. Yes, this is why it's hard to get a hotel room. And some of you are probably thinking there's already too much traffic on the roads, but that's another question. But the consumer potential creates significant room for growth. When people talk about consumption, they talk about things like durables, etc. But I want to point you to something. Since we've just crossed Raki, a friend of mine actually runs one of the largest destination wedding hotel businesses. So he was telling me some very interesting data on weddings. So we of course have a lot of young people. We have 600 million people who are today unmarried. At any given point in time, about 100 million people are actually seeking someone to marry. And the wedding economy, as evidenced by a recent wedding in PKC and many others, is actually becoming very large. Now, if you look at the last year in itself, we had 38 lakh weddings that happened in 2023. There was some spillover that happened from COVID. But if you look at the size of the wedding economy, it has become 5 lakh crores, or 20% of jewelry demand now comes from weddings. Interestingly, Raki just passed by, and I always remember Raki as a very basic festival where I tied a Raki to my brother and I would get, 10 or 100 rupees. I found out that the spend on Raki this year in itself was 12,000 crores. So even big festivals, people want to go out and consume. The fifth story, of course, is one that all of us know, and I love to ask this trick question that how many countries actually use UPI? And most people one. And then I go and tell them actually the number is closer to 9. Even this data is a little out of place. But India, of course, leads both online banking and digital penetration. Many credit cards and make sure they are working when we make a trip to a foreign country because we're so used to GPay at home. This is another one that I love. Many people follow things like Chandrayaan 1, 2, 3, and at any time this happens, a section of the world will say, "Boss, why do you need to do things like Chandrayaan as a poor country?" And I remind people that India is actually going to be a very big part of something called a space economy. Today, we are 2 to 3% of a global space economy. I know a little bit about the startup scene, but India has about 1,000 space startups, and ISRO has earned 4,000 crores in launching satellites for about 34 countries over the last four couple of years. I come from the state of UP, and we are opening branches at a very rapid pace in UP. But one of the places I've made multiple visits to is Banaras, and interestingly, Banaras had almost 10 crore visitors last year. That's many, many fold what Goa gets. It's incredible to see a state like UP actually had 30 crore visitors, and domestic tourism for various reasons is exploding. I was talking to a taxi driver in Goa where my husband's from, and I was telling him that ab to time bahut acha aa gaya hai because a lot of foreigners will come as Christmas season comes in, and he said, "Madam, what are you talking about? We don't make money from foreign tourists. They stay in small resorts and 3 stars. We make money from Indian tourists, and we make money all year long." And all of you who have traveled, I think this. It's also the reason, by the way, that passenger traffic, especially domestic traffic, has just boomed in the last 3 years. All this, of course, necessitates that hopefully over the next 10 years, a meaningful amount of infrastructure is going to be built. And some people tell me that, why is India building so many airports and so many metros? Is it just going to be ghost towns created? I don't think so, because if you look at the number of Indians that are going to travel, I think this infrastructure is necessary and to be used. Um, the eighth one that I like to talk about is, of course, many years ago when most of us looked at India and Indian markets, we were obsessed with what the foreign investor is going to do. Today, SIP has become the stuff of memes. And if you look at ownership of retail plus domestic institutional investors, which is mutual funds, we have actually risen from 18 to 24% when foreign ownership has fallen. So our capital markets are becoming increasingly more Atmanirbhar. The ninth one I like to talk about is energy consumption. There's all this talk about power infrastructure being put up in the country. There's all this buzz around power stocks. It's a theme that we have looked at closely in the portfolios. And the underlying genesis for it is this. If you look at per capita power consumption in Western countries, it's about 6,000 units. If you look at per capita power consumption in India, it's about 1,300. So we have one of the lowest per capita consumptions of power. We're already the second largest coal producer in the world and the third largest consumer of electricity in the world. But there's a significant amount of power capacity, including renewables, that will be created. And last is, I think, because all of you are investors, everyone loves to look at multi-baggers. And uh, we pulled up some interesting data as to which market had generated the maximum number of multi-baggers over the last decade, over the last 20 years. That, of course, also happened to be India. So 54% of the NSE 500 has actually been a multi-bagger over the last 10 years. And I always tell investors who are looking to identify sectors that don't worry about finding the best sector to invest in when 54% of NSE 500 has been a multi-bagger. Interesting other thing that has happened is, people talk to me about geopolitics and stuff like that. And I always say, finally, equity returns are driven by earnings growth. And one of the things that has happened is not only has earnings growth got stronger, the color of capital markets has gotten stronger. So today, loss-making companies in India are actually at all-time lows. 1% of large caps, 6% of mid caps, 8% of small caps are loss-making. And this is a significant improvement from at least 4 or 5 years ago. So the health of capital markets has gotten good. And all this optimism is at a time where, when you look at many global economies, there is a worry about potential recession. Um, zero is not a number that makes you feel very excited, but in this case it is. So there's a 73% probability of a Germany or a 50, but the probabilities are significantly lower for us. And I think if there's one chart in all of this that all of us should remember, it is this one. Over the last 10 years, we've been doing this journey of 2 trillion to 5 trillion GDP. And it's a very special journey in many nations' trajectory. And this is what it has meant for three major economies. So the US went through this journey in the early 80s. It took 11 years to go from 2 trillion to 5 trillion, but the Dow Jones grew at 15x. This happened in Japan in 8 years, a little after. The Tokyo Stock Exchange grew 19x. It happened in China in 5 years. The Hang Seng grew 4x. Incidentally, since crossing the 2 trillion mark, the Nifty has already multiplied 3x. And while we don't know what the future holds, I think the story of these three economies tells us something. So there is a lot to be optimistic about. One of the other things I also like about India is that a lot of investors, when we do Q&A, ask me questions with a bang. But that's not my point. I think the mood of the nation is very often gauged by the language of its movies. And Javed Akhtar told me some of these stories. So in 1950s, there was a movie called Devdas. And he used to be a college hero, college kid's hero. But finally, he was a flawed hero who wanted to inflict self-harm. And that was the mood of the nation. In the 1960s, we made a movie called Mother India, where there was an evil moneylender. A moneylender was a bad character. And in the 1970s, this was the India of the emergencies. The angry young man was a national hero, and a smuggler was actually a positive character. In the 1980s, our villain actually used to be mill owners and corporates. You remember this movie Kala Patthar, where the villain was a coal mine. In the 1990s, liberalization came to India and a bunch of foreign products started hitting the market. Now, what happened is a bunch of filmmakers also started making, and Yash Chopra pioneered this movie set in London, in Paris, in Switzerland, and abroad was also a hero. The same production house, however, 10 years later made a movie set in a small town India called Panti or Republic. And after that, you would have seen a series of movies set in Patiala or Agra or Kolkata or Chennai. Because after the 2000s, MNCs started coming to India, a bull market started coming in, and Indians realized maybe we don't need to go abroad. We can just be in India and be happy. In 2010, they made a movie called Band Baja Barat, which talked about the spirit of entrepreneurship. And this, I think, is the move. I do believe that I can do something. I am not angry, inspirational. This journey from the self harming Indian, the angry Indian, the foreign embracing Indian, to finally the Indian who owns his or her Indianness and thinks of success as aspirational is really what excites me about the next decade. So let me stop here, and I'm happy to take any questions. Access team, back to you.
Thank you so much, Radhika. I think the icing on the cake was the movie's reference. It certainly took us back in time and created a lot of nostalgia for our viewers. I'm pretty sure. I'm thinking about everything that you showed, and India has obviously been the cynosure of all eyes globally, right? Given how our financial markets have evolved, especially since the pandemic crash in 2020. That said, one of the things that really stood out from your wonderful presentation was that there's just so much evidence of all that's happened on the ground across sectors that we think of it as nothing short of a missed opportunity for anyone to not have a slice of this coming growth over the next decade or two. In that sense, I think your untold story surely has shaken the tree for anyone who is still sitting on the fence with respect to the promise that India has, even from these levels. So once again, thank you so much. We already have some questions that have started to trickle in, so we'd really love to get your thoughts on those. And so the first, question that I want to send in, Radhika, is what advice would you give to first-time investors who are new to the markets, and also investors who've probably been around for a while, but given high valuations that often get quoted in the media and all of the global uncertainties, how should they really position their investment in the market as we speak? What would your advice be to them?
So for new investors, firstly, I always say get educated because I think a lot of investment mistakes happen because of a misalignment of expectations. So I really think it's very important for new investors to get educated, and I think it's important for them to make the move to get started. Now, one of the challenges in this market and all this news with new investors is incorrect expectations from equity returns. So I think it's very important to calibrate one, your expectations, and second, your goals. If you have realistic expectations of equity returns and you are clear about what your goals are, I do think your investing journey becomes a lot simpler. The second thing is, I am a big advocate of what I call the Dal Chawal school of investing, which is especially for newer investors. They have a tendency to, because of hearsay, jump into a lot of complex products and say, oh, I'm too evolved for an SIP, I'm too evolved for a flexi cap fund, and I always advocate doing the simpler things.
Yeah, I think that's right, Radhika. I think the very concept of education is something that a lot of people are now starting, like you rightly said, it's essential to kind of get the correct education, which is another, point of discussion altogether. But I think at least this generation wants to be empowered by educating themselves, and that's a great start, right? Because there's just so much noise out there, and then the burden of expectations, and really, high expectations, sometimes crossing the frontiers of unrealistic expectations, the thing that causes most issues in our lives. So that's a very important point that you've brought to the fore. Can't agree more. My next question, Radhika, to you is: in your experience, and you've been in financial markets for a while now, what are the common mistakes that you've seen investors make, and how can they avoid them in order to, have better returns adjusted for the amount of risk that they are taking on?
So, common mistakes, I think asset allocation, uh, especially now in this social media driven era, I think it is very, very important to start paying. I always say risk appetite is not decided in a bull market. In a bull market, everyone says my risk appetite has gone up. So I think that is extremely important. I know asset allocation is something that's important to you guys, but it is very important. I already talked about expectation mismatch. So a lot of people will look at the last 1 to 3 year returns on equity as a proxy for the future. And it really is. 30% return is not a proxy for the future. For all my optimism about India, I can't wake up with a straight face and tell you you're going to make 30% returns a year. I can tell you you're going to make 12 to 15, and that's a great thing. But it's important to calibrate that. I would suggest that everyone have a contingency fund. These days, people allocate to equities in a way that they don't maintain contingency money, and equities are volatile. So I highly recommend contingency-based investing. And fourth is, social media has become a great source of help, but also a great source of noise in investing. So just being careful about who you listen to today is very, very important.
Can't agree more. Radhika, as someone who's really seen the evolution of markets over time, what are the key trends that today's investors should watch out for if someone is thinking about asset allocation investments over the next decade? As a corollary to that question, how do you see India's consumption and manufacturing story panning out over the next decade under Atmanirbhar Bharat, which is something that the government has been promoting and continues to
I
do
missed
so.
your first question because I missed the first half of the question.
Yeah, so the question was, the first half, rather, the question was, as someone who's seen the markets evolve over time, what are some of the key trends that someone with a decade-long view should monitor closely to, to make solid investments over that duration?
So I think, as I said, it is very much a multi-sector opportunity. Within that, I think discretionary consumption and premiumization to me is a big mega trend. A lot of the data I showed today points towards that. I think manufacturing in itself is a very large opportunity. India historically used to be a services-driven economy, but incentives, labor, I do believe manufacturing as an opportunity is going to be large. So beneficiaries of capex revival is an opportunity. I think India's expertise in IT and strong is going to change color. And I think financialization is one of the largest mega trends. You are already seeing it again in some of the data I talked about. But financialization is a meaningful mega trend.
Yeah, undoubtedly. We have one more question, and this is often a term that's everyone kind of knows about, and that's diversification. Given where the markets are, how would you define how significant diversification um, uh, is at the current juncture? Because, like I said before, a lot of people are thinking, we want to get into the markets, but then we hear about how some of these valuations are really stretched. Is diversification a strategy that can help an average investor even in times such as this?
So there are two kinds of diversification. There is diversification across asset classes, which I think is important even in these times. I think asset allocation is what helps you navigate, periods of valuation. Diversification is about, so what I don't advocate in these conditions is people investing in very narrow opportunities, right? You pick an extremely narrow sector where stocks are at 70, 80, and no matter how good the outlook is, your probability of making money is a little thin, right? You start diversifying in broad basing sectors and picking funds that have the ability to be nimble, and I think you stand a better chance, particularly in these valuations. There are markets where multiples are 12 to 13 and whatever you pick up sort of can make money. This is unfortunately not that. So I get worried with very, very narrow ideas.
Yeah, I mean that's the game in town if you ask me. Like you rightly put it, expectations with this bull run have soared to an extent where I think the average Joe on the street will think making 4 to 5% every month and consistently at that
Someone
is
told me
easy.
in a micro cap context that they are going to make a percent every day.
Yeah, which is, I mean, simple math tells you that even someone like
Simple math
Warren.
tells you that that might be a little difficult.
Yeah,
So
yeah,
I
absolutely.
think toning down expectations is important and just broad basing in your. So I always tell people, when they talk to me about NFOs, I always tell people the one thing I suggest you do is avoid things that are very, very narrow.
Yeah, yeah, totally. So, Radhika, on behalf of all of our participants and the team at Axis, I want to thank you once again. It's always a pleasure listening to you, and hopefully, we will continue to do many more of these formats where all of us can listen to your wonderful thoughts and the rich experience that you bring to the table. So, thank you once again, Radhika, for making time to sit down with us and talk to us. I'm sure everyone has had some takeaway, and we look forward to talking to you again soon. Thank you very much, and enjoy the weekend.
Thank, thank you so much, guys. Have a great weekend.
Bye bye.